どうも、家庭に電力2.0で始めたいと思います。今日1201回目というところで、このインドネシアの排出権みたいなところですね、少しご紹介したいなと思っています。で実際にこの The rapid progress of carbon pricing in Indonesia has reached important milestone. Presidential regulation prepares 98-2021 on carbon economic value or nilai economy carbon. NK has served as a cornerstone for building the infrastructure and the framework for its implementation. The process of the NEK regulation is a response to the Article 6 Paris Agreement, which allows parties to trade carbon in order to lower emissions. Some instruments are offered under the regulation consisting of carbon trading, resulting base payment and carbon tax, which has twice delayed and it's expected to be launched in 2025. Among all the instruments, carbon trading is identified as a major instrument with a cap and trade mechanism that enables institutions to claim their high incentive emission by buying credit from other activities that provide carbon stocks. To strengthen the implementation of carbon trading under Law 4 2023 on the development and strengthening of the financial sector, the Financial Service Authority, OJK, is tasked with establishing and overseeing carbon trading in the carbon market. In just 7 months, the OJK issued regulations on carbon trading through carbon exchange and officially launched the carbon market on September 26, 2023. This means that financing is one of the solutions to bridge the gap in achieving climate targets and plays a crucial role in raising awareness of the devastation of climate change, especially for the business sector. Prior to this, Indonesia has familiar with the voluntary carbon market (VCN) since the past few decades before deciding to establish a mandatory carbon market to meet nationally determined contribution NDC targets for specific sectors. For example, the Sumatera Merah Peatland project has successfully sold 3 million carbon credits to big companies, and the Indonesia Climate Change ICX trading platform was created to build the ecosystem for the private sector with a voluntary scheme. Earlier this year, power generation had chosen as the first subsector to implement mandatory carbon trading due to its easily identifiable emissions calculations based on land strengthened by the Ministry of Energy and Mineral Resources Regulation 16, 2022 on procedures for implementing carbon economic value in the power generation subsector. This was initiated in the pilot program in 2021 before being launched in February 2023. In the first compliance carbon trading phase 99, CFPP with covers 86% of coal power plants in Indonesia participating in the cap and trade schemes. Each CFPP has a maximum allowance or emission quota that is set based on the previous performance and unit criteria. For these four emits less than the allowance, they are able to trade the remaining quota to other companies that exceed the maximum cap. When the CFPP emission is above the given quota, they will reduce the emissions by buying quota from the CFPP or purchase carbon credit. The success of this pilot program, while requiring some improvements, has encouraged other sectors to consider carbon trading and expand its implementation beyond the energy sector, pending the release of the carbon trading roadmap currently under discussion at the coordinating Ministry of Investment and Maritime Affairs. With the establishment of the carbon market, the trading products to be sold and traded are carbon quotas from the compliance sector, called PT, BAE, PU, and carbon credit or SPE, GRK. PT, BAE, PU could only be sold and bought by the mandatory sector that has a maximum cap on emitting emissions, while credits may be supplied from various projects. For instance, peat demonstration, and renewable energy projects where all participants are able to purchase the credit to avoid emissions. To participate in the carbon exchange, all entities, whether producers of emissions or not, must obtain a permit from National Standard Registry (SRN), a platform managed by the Ministry of Environmental and Forestry as a national database for emissions and validate credibility of products and participants involved in carbon exchange. With high hope, careful emission monitoring and evaluation could be easily integrated across sectors in one product and increase accountability and data transparency that is being shown to the public. The launch of the carbon exchange just 1 month after the OJK issued its regulations has raised several questions, one of which is whether Indonesia is adequately prepared to manage it. In the absence of the comprehensive market ecosystem, careful planning and implementation by the government, particularly the regulator and relevant ministries, is needed. Also, enthusiasm has been shown by 13 transactions with a total value of 459,914 metric tons of CO2 equivalent at a unit price of around $4.51。まだまだ4.51ドルなんで、かなり安いですね。Dominated by state-owned enterprises on the first day of the launch. Lessons from several emission trading system (ETS), such as China's, show that it takes a considerable amount of time, almost a decade, to build a strong and mature market ecosystem. Validation, credibility, and data transparency and fundamental aspects that should be carefully monitored by various stakeholders, including the OJK, the Ministry of Environmental and Forestry, the Ministry of Energy and Mineral Resources, and others. Market integration between power sector, carbon trading, and the upcoming compliance sector with the recently released carbon market must be implemented to achieve one common system and pricing mechanism, since voluntary party dominates the current market. The existence of the carbon market provides an opportunity for companies to raise finance through carbon trading within the market. However, this should be closely scrutinized in terms of the requirements for companies to enter the market, such as taking action to reduce emissions, maintaining comprehensive emissions inventories, and having strategies for future emissions reductions. It is important to avoid the interpretation that the carbon market is simply a strategy to reduce emissions by buying as many carbon credits as possible. There should be an institution capable of conducting accurate and comprehensive checks and verification of the PT, and SPE, GRE being traded, as well as verifying valid and internationally recognized calculation methodologies to avoid double counting and ensure accountability for projects generating PTBAE and SPE GREK. In addition, there should be a careful monitoring system of the use of carbon market funds. The government has mentioned that the funds will be managed by the Environmental Funds Agency, BPDLH, but it is not clearly stated how mechanism works yet. Renowned for its tropical forest and abundant renewable energy potential, most of Indonesia's carbon credits come from natural resources. Indonesia's FOLU sector could potentially absorb 25.18 billion tons of carbon from rainforest. Mangrove conservation could absorb around 33 billion tons of carbon, and peatland could absorb almost 55 billion tons of carbon. With the advent of the carbon market, significant forest, mangrove, and renewable energy projects are expected to grow rapidly. It is crucial to assess and verify each project holistically and monitor its implementation to avoid greenwashing practices that claim significant carbon sequestration and reduction without following established procedures. It is also important to maintain a balance between supply and demand in the market in order to maintain market mechanism and ensure smooth transactions. Given the early experience of European Union Emission Trading Scheme (EU ETS), where an oversupply led to carbon prices approaching zero in 27, precautions should be taken to prevent carbon prices from becoming uncompetitive. In addition, the carbon market will soon allow companies outside Indonesia to participate in carbon trading, which could lead to carbon linkage if prices are not competitive and domestic companies do not benefit from the incentive provided by the carbon market. The Ministry of Energy and Mineral Resources (ESDM), which regulates quotas and allowance in the electricity sector, must limit the emissions allowed by each company that own power plants. With a planned maximum quota of 85% in 2024, it is expected to encourage each operator to develop emission reduction strategy. At present, quotas are still based on emission intensity and the average emissions of the previous year, which can be lead higher allocation in the following year. Regular monitoring is therefore required to reduce the emission quotas for each power plant. Carbon markets also open the opportunity to widely inform the green taxonomy principles, especially to financial institutions, investors, and project owners. It could enable the identification of whether a project can be traded in the carbon market and fall within the green taxonomy classification. This can enhance transparency in assessments and trust while assisting investors and financial institutions in mobilizing funding for sustainable projects. However, further institutional coordination and agreements are also necessary for this. Also, the carbon market in Indonesia is still relatively new. Its effective implementation is expected to drive changes in industrial behavior, particularly in the power generation subsector and the energy sector as a whole. Information dissemination to a wider audience, it's important to attract more buyers and traders to participate in carbon exchange beyond the energy sectors. In this nascent stage, an incentive from the government is required since to pass the green criteria extra processes are needed, which creates additional costs and potentially becomes a burden, making the carbon market attractive. The market also creates opportunities for Indonesia to fulfill the need of climate financing, while pushing the launch of carbon tax is important as a complement tool. Regular monitoring and evaluation is necessary to keep all activities on the right track, while further enhancement and development are necessary to make the market eligible at the international level. That's all.